Warren Buffett making headlines not for buying a new stock or upping his stake in a company, but instead for his endorsement of Fed Chair Jerome Powell. In an interview with CNBC, the CEO and chairman of Berkshire Hathaway praised the job that Powell and company did throughout the pandemic, saying that had Powell not been leading the Fed in March of 2020, the U.S. economy, quote, could have gone very different. He added he doesn't think he would do as good a job as Powell had done. The backdrop for this, by the way, is that yesterday we got Fed minutes. We had some Fed officials talking about a potential recession. We also, by the way, got producer prices this morning that showed a drop on both the top line and the core numbers. So interesting there as we talk about the outlook for the Fed.
That's right. And I mean, thinking through how many of the different major kind of heads of investment, or at least in the broader equity market scene, we think about how many of them have been calling for Fed Chair Jay Powell to continuously look at more forward-looking data. And of course, the Fed has to get through some of the existing economic data that is on a lagging basis, but at the same time gives them perhaps the best reading, or historically so has given them the best reading on where their policy is beginning to set in over time as well. And so with that, we do know that Warren Buffett approves and believes in Fed Chair Jerome Powell. Let's bring in our next guest for her view on the central banks. Joining us now, we've got Ellen Hazen, who is the F.L.Putnam Chief Market Strategist. Great to have you here with us, Ellen. First and foremost, this vote of confidence that we're seeing now from Warren Buffett into Powell, does it come by surprise to you or at all, or is this largely expected?
I was glad to hear him say that he approves of the job that Powell has been doing and it is doing. So that's a real vote of confidence in the market. One of the other things that I thought was really interesting about his comments yesterday was talking about how U.S. depositors will be safe and that the FDIC is paid for by the banks. So even if depositors get bailed out in certain areas, like with Signature in Silicon Valley, it's not going to be a risk to U.S. depositors. I think that message came through loud and clear in his comments, along with the praise of Jay Powell. So I think that Warren Buffett is a very smart man. He's seen an awful lot of central bankers come and go. And I think he's absolutely right about this one.
And so, there has been, though, a lot of discussion and debate about Fed credibility, right, Ellen? And so I'm curious how you're thinking about that issue from here. I mean, in other words, I heard some commentary yesterday when people are looking at the minutes and the Fed is talking about a recession. Well, that their forecast is not necessarily worth very much, although obviously they're the central bank of the United States. What's your view?
I think economists, like all forecasters, can have biases and can have blind spots. And I think that they are not always right. And so certainly in our business of investing, if you hit 600 or if you're right 60% of the time, that's a very good year. And I think that the same can be said for economists and for the Fed economists in particular. So whether or not the Fed staff is correct that there will be a recession later this year, I don't know. But I do agree with something else that Warren Buffett said in response to this, which is that Berkshire's not changing what they do depending on whether or not there's a recession. They're looking at the fundamentals of the business. And that's exactly what we do in investing too, right? We can't know if there's going to be a recession, but what we can do is find companies that are going to do pretty well regardless of whether or not there is a recession. And that's a key distinction, right? We can't control what is going to happen. We can only control what we do. As far as the Fed's credibility, I think the Fed has been very, very clear that they want to see inflation come back down toward their 2% target, and we're still at 5% plus. So it's going to be very difficult for them to start pivoting anytime soon unless we see that inflation number really nosedive. And even though it may cause the economy to be weaker than it would otherwise have been, I think they've got to stay the course. I think they know that they lost a lot of credibility by being so late to raising rates and by being so late to recognize that inflation was going to be non-transitory. And I don't think that they are going to, I don't think they're going to pivot as quickly as the market seems to think they are.
From a portfolio strategy perspective, where are the best places to be in the market as the Fed continues on their own policy pathway?
So we're cautious on areas that are going to be negatively exposed to higher rates. So we all saw what happened with some of the regional banks. But there are other areas also negatively exposed to higher real rates, including autos, including housing. So we're cautious on those. And we're looking for companies that are steady eddies, that provide high cash flow generation, that pay a nice dividend, and that are going to do okay regardless of the economic environment. So you can look at areas like healthcare and drug distributors in particular. You can look at certain industrial companies that are less market sensitive. You can look at payroll processors, a lot of things that are going to be relatively less sensitive to the economy, so that whether or not there's a recession, they're going to do okay in a slowdown.
And what about turning back to Warren Buffett for a minute and his sort of value slant, if you will? It sounds like you're sort of in the same camp when I hear you talk about things like healthcare, for example.
Well, as I said, very smart man. Happy to be compared to him in any way whatsoever. Certainly, we all learned this in our CFA programs. Stocks are worth the present value of their future cash flows, right? Now, in some markets, that doesn't always come true as quickly as you think it should. But in the medium to long term, it does come true. And so for us, that is our true north, is how much cash are these companies going to generate, and what are we paying in order to be the recipients of that cash flow? So I think that sometimes value is in vogue, sometimes growth is in vogue. Certainly the first part of this year, growth has come roaring back with a vengeance after being crushed last year. But if you wait out all that noise and you just look for companies that are generating a lot of cash, then over the long term, you're going to do well. You're going to meet your financial goals.
And finally, Ellen, one single pick that stands out to me is Schwab. And that's just because there's been a lot of scrutiny of the company in the wake of the sort of mini banking crisis, if you will. Why do you step in there at this point? And is that a vote of confidence on your part in Schwab?
That's a great question. Schwab is trading at half of its normal multiple. And so one way to interpret that is that the bank is essentially worth nothing. They have more than enough liquidity to meet any deposit withdrawals that could happen. The vast majority of their deposits are insured, so they're below that FDIC limit. So that is a big difference from some of the banks that failed earlier in March. And as we look at it, Schwab dominates the custodial business. They're the largest broker, certainly the largest publicly traded retail broker for U.S. clients. They're very conservatively managed. And it is true that they have a big held to maturity book, the same as some of the banks, but they have more than enough liquidity in terms of credit lines, and most of their deposits are insured. So if you look at the punishment the stock has taken, it's really disproportionate to what we think the most likely outcome is. And when you compare the upside to what the possible downside is, we think it's pretty attractive.
Ellen, good to see you. Ellen Hazen, F.L.Putnam Chief Market Strategist. Thank you.
Thank you.